Wednesday, the 23rd of October. Welcome our viewers here in Nigeria and around the world. Let's get Business Morning started. I am Bosun Amafai from our global headquarters in Lagos. The latest $3 billion loan from the World Bank is still in the news. According to Moody's, the loan that will help Nigeria upgrade and expand the country's electricity transmission and distribution will help improve reliability of electricity to Nigerian households, firms, and raise the population's access to electricity. And that was according to a short statement released late yesterday by Moody's Vice President and Head of Electricity Sector, Christopher Bredholt. According to him, longer-term challenges for the Nigeria's electricity sector, however, remains, and he listed this to include cost-reflective tariffs. Nigerians need to diversify into renewable energy sources, increased organized private sector participation in the electricity sector, and very good governance frameworks of independent regulatory institutions within the power sector. If you have seen the latest Ease of Doing Business 2019 compliance report, which was released overnight by the Jumoke Oduwole's Presidential Enabling Business Council, PEBEC, the NERC is ranked high among those who are complying with the ease of doing business. That's a report that's already out and is coming through to everyone this morning. Let's get on to one other big issue. Nigeria closing its land borders for all exports and imports, saying everything has to be done via the seaports. Nigeria and Ghana, according to information late last night, has set up an independent team of trade and security officials to jointly assess the situations on the ground around Nigeria's west coast land borders. According to sources, land borders, Nigeria's land, Ghanaian officials have reportedly met the Nigerian authorities in Abuja over the last few days to reappraise Nigeria's total land border. Joy TV in Ghana last night did an extensive interview and discussion around Nigeria's land border closure and its negative impact on trade between the two countries. The joint team will therefore produce a report to be reviewed by the Nigerian authorities as well as Ghana. Ghana is taking the land border closure very seriously. Two Ghanaian business leaders were on Joy TV late last night talking about this latest development. Meantime, banks and telecommunications operators are head-to-head or word of words over who's responsible for the move to charge consumers for using their mobile phones to do transactions called the USSD code. That's one big story. The telcos on Tuesday says they disagree with the banks that the charges would lead to 450% rise in tariffs, and that banks are the, quote, biggest beneficiaries, end of quote, in the USSD value chains. Earlier, 13 Nigerian banks have signed a letter jointly denying that they were part of the direct USSD access charge of 4 naira per 20 seconds, which was scheduled to take off on Monday this week, but was since shelved due to social media pressure. On Tuesday, telecoms sector regulator, Nigeria's Communications Commission, NCC, ordered the telcos to suspend end-user billing through USSD channels with immediate effect. And that's some of the stories making the big headlines right now this morning as we get on with the third Business and Markets Day of the week. Let's touch base with Temple Ashaju at the Nigerian Stock Exchange, our business correspondent, bringing us up to speed this morning. The bank's earnings are coming through for third quarter and 9 months, but the investors look like they're a little bit unimpressed with the numbers they're seeing so far. So the stock market took a few steps, about 0.1% backwards yesterday, despite aggressive trading on Zenith Bank shares. That's the bones. Temple is here to put some flesh on that for us, as well as other markets that he covers for you on a daily basis here on the show. Good morning, Tempo.
Good morning, Bosun.
Good. It's time to look a little bit cheerful, Tempo. But yes, the market's down, the numbers are coming through. But let's put some life into this. I'm sure investors are not in the best of moods right now when you talk about the market and some of the numbers the banks are coming through with, some good, some not so good. Take us through this, Tempo.
Yeah, well, some investors are really happy with the numbers, actually. If you look at that of Guaranty Trust Bank, there's a little bit of interest in it. There was some crossing on Zenith Bank and Guaranty Trust Bank yesterday. If not for the losses that we saw around Dangote Cement and MTN shares, we would have closed in the positive direction yesterday because, again, the market actually opened positive yesterday. Eventually we saw losses of about 1/10, 0.09% yesterday. Of course, the negative performance came on the back of the declines that we saw in the two most capitalized stocks. That's MTN, which lost some 77 basis points, and Dangote Cement, which shed some 7 basis points. But we had seen some impactful gains across Stanbic IBTC, Access Bank, Zenith Bank. We got some folks that were buying yesterday in anticipation of some good numbers that will be released by these banks yesterday. And as I said earlier, we saw some crosses on Zenith Bank and, of course, Guaranty Trust Bank yesterday. Zenith Bank specifically had some 79.97% volume of units of shares, traded yesterday, representing the quota of the volume of shares traded in the market yesterday, while some 8.62% of the volume of shares traded yesterday represented the volume or units that was traded on that of Guaranty Trust Bank yesterday. But basically, if you look at the market breadth, it was flat at 12 gainers and 12 losers yesterday in the markets. Of course, a couple of stocks were on bid and some were on offer yesterday. Those were on bid were Courtville, which gained some 10% and was the top gainer yesterday. And if you look at Eternal PLC, that was actually on offer yesterday, lost some 952 basis points, basically. But if you look at the energy stocks, again, it was only Eternal Oil that lost yesterday. 105,000 units of its shares were traded off yesterday. We begin to see some sell-off on the oil and gas or energy stocks in the markets. NASD OTC has a bit of a tail spinning yesterday, 0.28% down. We got the capitalization now below 500 billion naira, specifically 499.52 billion naira. And there were 6 trades on that platform. We got Air Liquide, which is currently carrying out some kind of a rights issue. We had CSCS PLC, that was the only stock yesterday that actually declined by some 0.28% and fell to 12 naira 10 kobo on that side of the market. But generally, volume of transaction was just 10,000 or a little over 10,000. For the fixed income side of the market, you got bonds first. We saw mixed trading session. We got the average yield declining by some 3 basis points, and market participants yesterday were positioning themselves for the auction, the bonds auction that will be taking place today midweek. But for Treasury bill side of the market, average yields actually advanced by some 13 basis points. Treasury bills remained sell-side driven yesterday as investors gave cold shoulder to the mid and, of course, the short end of the curve. There was a little bit of demand at the longer end of the curve. So, of course, if you see the 226-day maturity and, of course, the 296-day maturity, some of which you can see right there on the screen, where we saw was where we actually saw some bargain yesterday, Bosun.
Yes, Tempo, if you step back into the stock market, if you look at the numbers, yes, you see some strong volume in the banking stocks or the banking names. But again, the numbers are coming through. We've just gotten about 3 of the banks, so there's still a lot more to expect for their 9-month results. So what are you hearing on the ground as far as these numbers are concerned specifically?
Some traders, investors are not so bullish, actually, while some are really just taking a guess, on these stocks. Because, again, you recall that some banks were debited for not meeting their LDR demands as at September 30 by the Central Bank of Nigeria. So they're expecting that to, possibly have a bit of an impact on those banks. And that's where the concern is. But some folks who's got deep pockets at this point are taking the bet on the banks, some of the tier one banks actually. They are saying if the likes of UBA are able to actually push out some very positive number, impressive details, given the kind of circumstance that we have, in spite of the circumstances that surrounds the macroeconomic environment at this point, that some other banks like Access Bank and Stanbic IBTC, who are heavy on investment banking, should be able to do the same thing, and that is why they are actually buying. That's why we saw a bit of a cross deal on Zenith Bank yesterday. Again, some folks before now, when in Q2 the numbers of Zenith Bank actually fell to 16 naira. They did argue that it wasn't going to go lesser than that. It wasn't going to go below that threshold, and we saw it shooting up again. So they're really bullish on. Some are bullish on stocks like that, while some are not too bullish, given the headwind, the regulatory headwind hitting that sector right now, Bosun.
Yes, I'm sure one of the big stories, as you're hinting about, is the regulatory issues. And Victor Chiazzo, from Head of Research at FSL Securities, is to be with you there at the exchange to take us through some of these earnings, in particular for the banks. The central bank had been firing on all fronts, if you want to put it that way, since late last year and more since the early this year into the banking sector, issuing circulars left, right, and center, issuing exposure draft on what should happen to the new financial services providers like MTN, Airtel, and the rest of them, how they should get the issues of consumer protection, due charges, loan-to-deposit ratio, and all of that. So it looks like a very busy time. It looks like we've gotten this, all this around that we need to manage right now, and this is coming through for some of the banks as we speak right now. And Temple, as you said there, in terms of the loan-to-deposit ratio, some of the banks did not meet that threshold. They were penalized about 490 billion, close to 500 billion. Then some report says the central bank has refunded about 200 billion of that money. But the new threshold, which the central bank governor talked about, will expire December 31st, 2019, will not be extended. And those who fail to meet 60% threshold will now have to meet 65% higher threshold. For some of the banks, this threshold is not yet been met. As at the numbers released yesterday by UBA, one of the tier one banks, loan-to-deposit ratio as at the end of September this year, which is the 9 months report, is 56.1%, which was higher than 49.1% reported in the 9 months period of a year ago, just 6.9%. So UBA is still below that 65 liquidity, loan-to-deposit ratio, beg your pardon, threshold. GT Banks also trying to cross that line for some of the numbers that we already have. So these are some of the numbers that everyone is trying to crunch and look at the costs and the key pressure that the banks are currently facing, including impairment charges, which we shouldn't forget in the conversation. Victor Chiazzo from FSL Securities is on the trading floor at the Nigerian Stock Exchange. Victor, good morning. We appreciate your finding time to be here.
Good morning.
Yeah. Thank you, Victor. Sorry, it's a very busy time, so we understand everyone's time. I'm sure you've seen some of the early numbers, the numbers from the early birds, so to speak, in the banking sector. What are you reading through the numbers?
Yeah, Boston, we've seen about 3 of the heavyweights from the banking sector. We've seen GT, we've seen UBA, and we've seen FBNH, which is a holdco structure. We have the holdco structure. Looking at the 3 together, what we've observed is that Q3 performance for the banks hasn't been as strong as one would have expected. It shows that the general state of the economy is taking a toll on most of the banks. Q3 in isolation hasn't been so good for UBA, First Bank, and as well as GT Bank. But for the 9 months, cumulatively, I think some of these banks have had some headway from first quarter, second quarter. So despite not doing so well from the third quarter, bottom line still looks good for most of the banks.
Okay, where do you think the key pressure points are right now for the banks? Where do you think the pressure is piling up the most if you look at the raft of regulatory instructions or directives from the central bank since we started the new year?
Yeah, for the banks, I think where most of the pressure will be is the ability to make sure they can keep NPLs at very, very low rates. Because if you look at over the years for the likes of First Bank, UBA, likes of First Bank have just been able to drop impairment charge from as high as 25.6% for full year 2018 to about 12.6% as at 9 months 2019. So with the regulatory pressures and regulatory circulars coming out from the CBN, mandating banks to lend to the real sector, increasing loan-to-deposit ratio to 60 from then at the end of September, now further increasing it to 65%. These are significant pressures which the bank might need to take seriously, because for the likes of First Bank, they wouldn't want to go back to the point where we have NPLs above 20, close to 30%. With NPLs at 12.6, most investors will be happy that First Bank is closing in on the ratio where the bank itself can pay dividends. So I think that is a key area where the banks will need to look at their credit risk analysis to make sure that their loans don't go bad and they don't go back to the areas where they have high NPLs, as well as their interest income area. That's also another area where I think there's a bit of a pressure, because if you look across all the banks that have posted their 9 months earnings, aside from UBA, which posted about 10% interest earnings growth, First Bank and GTB recorded a decline in interest income. And as we all know, that is where the core business function of the bank is supposed to come from in terms of their earnings. So for the likes of GT and First Bank reporting reduction in interest earnings, they need to begin to find ways to ramp up income in that space. We all know that interest rates have actually dropped. If you look at the average interest rates from the market in 2018, it was about 12.88%, while for 2019, interest income from OMO auctions is currently at 12.7. So it's 12.88 at 2018, dropping to 12.7. That little spread accounts for a significant portion on the bank's interest income. So I think those are where the pressures are going to come from for the banks. And also looking at what the CBN is doing. If you recall, CBN, yes.
Yes, a quick one here, because we have about 2 minutes left. I didn't want us to miss this one major item, which is for all the banks. But if you look at FBNH, AMCON levy, 13.4% year on year for FBN Holdings. That's 29.23 billion naira. That's a whole lot of money that FBN Holdings, which is a financial bank, is paying to AMCON for what you call the backlog of the regulatory intervention of 2009-2010. How do you think this plays out for all the banks when they have to meet other capital adequacy ratio, liquidity ratio, and other parameters of the financial regulator, and they are still paying this AMCON contribution?
Well, Boston, the truth is that we are going to have tough times ahead, and despite these pressures we're seeing hitting the banks, it seems like they're not even going to, CBN is not allowing them to get a breather, because CBN still believes that the banks are still more or less the engine room to drive economic growth. So despite issues with AMCON and the banks trying to settle some of that outstanding, I think CBN understands and believes that for the real sector to grow, for real sector output to increase, the banks need to actually drive that sector. And the idea of funding from the banks going into treasury bills and going into government securities, I think CBN is trying to make sure that regime has come to an end. And if you recall, about some days back, there were rumors flying around that some investments that go into some loans that go into the real sector find their way back into government securities, and CBN has frowned at that. So this idea of carry trade, yes, CBN might not be able to stop that, except to see interest rate drop to single digits, where this carry trade won't be positive again. Then you begin to see those lending go to the real sector. But with regards to the AMCON loan, the truth is that the banks will really need to pay more attention to their credit risk analysis, their credit portfolio, to make sure that a significant portion of their loans don't go bad, to avoid a case of where you have AMCON coming in to take over most of these bad loans.
Okay, let's leave it there for today. Thank you so much, Victor Chiazor, Head of Research at FSL Securities Limited. Thank you so much. We appreciate you coming through on the program. Let's take a break, everyone. We'll be right back in 2 minutes.